Tesla reports earnings this week. And in this video, we're going to go over my expectations for this latest earnings report, go over my predictions on how the company would have performed, and overall take a look at what analysts are expecting for this quarterly report and for the years down the road. So Tesla has been on a massive run up, currently being traded at $437 a share. They are up over 746% over the past 12 months, which is absolutely incredible. They currently have a market cap of over $409 billion, but over the past few months, shares have been flat. They peaked at the end of August at around $500, but since that point, they have not returned to that $500 mark and have seen various peaks and declines over the past 2 months. So this earnings report is going to be big news for Tesla investors because positive earnings may lead to another spike in shares where we once again see the share price of Tesla cross that $500 mark. And in this video, we're going to go over what analysts are expecting for that earnings report. And of course, at the very end, I'm going to share with you my personal perspective on Tesla and whether or not they will beat what these analysts are expecting. So welcome back to the channel, everyone. As you know, I am the Gen Z investor, and every single day we talk about the stock market, go over different stocks you can buy and sell within your portfolio. And in this video, we're going to focus on Tesla and their latest quarterly report and my predictions for this quarter's earnings. So please hit that like button and subscribe, and we're going to jump right into it. Tesla reports their latest quarterly earnings after market close on October 21st. And for this latest quarter, analysts are expecting earnings per share of 60 cents and have a revenue estimate at $8.29 billion for those 3 months. They've also seen EPS up revisions happen 14 times over the last 90 days. And Tesla, over the past year, has had a strong history of actually beating what analysts are expecting. On the last quarter, they beat on both earnings per share and revenue estimates, and over the past 4 quarters, they've beaten on earnings per share each and every time. And for a couple of these quarters, they beat earning estimates by a significant amount. In Q3 2019, analysts actually expected Tesla to post a net loss, but Tesla actually surprised and posted 37 cents earnings per share. And you can see here over the next 4 quarters, they have beaten on earnings per share estimates each and every time. And moving forward over the next 4 quarters into the future, analysts have some big expectations for Tesla's performance. Q3 2020, this report that comes out later this week, analysts are expecting a 62% year-over-year growth in earnings per share. Moving over to Q4 2020, they're expecting close to 97% growth in earnings per share. So these are massive growth expectations from analysts. And continuing on, in Q1 2021, 196 projected estimated earnings growth and around a 90% year-over-year earnings growth in Q2 2021. So overall, analysts have some high expectations for Tesla and their next earning reports and are expecting big things and high growth rates from previous years. This one group of analysts actually believe Tesla stock could go up another 14 to 15% and reach record high deliveries of 500,000 vehicles to close out 2020. So Tesla's actually set itself up for a very strong third quarter earnings report. So with electric vehicle demand kind of rebounding from the slump we saw in the middle of 2020, Tesla is actually on track to beat analyst expectations and reach a delivery milestone. This is coming from analysts on their latest report. And the automaker's third quarterly deliveries already came in above expectations, and we're going to take a look at the results they posted for delivery numbers. And because of this positivity, they actually lifted their price target that was set at $475 all the way up to $500 per share, which implies close to a 14% potential upside over the next 12 months. So Tesla has done a nice job in growing deliveries and production numbers. They're becoming more efficient and actually improving the overall operational aspect of the business. And they've also seen nice growth in their external markets. China in particular has actually seen a great growth and a strong increase in profitability over the past few years and represents 40% of Tesla's annual sales. So this is strong earning numbers and earning expectation boosts for Tesla if they can continue to show a strong outlook and strong growth numbers from China. So why this analyst report is expecting some nice positive and earnings beat over this next quarterly report was because Tesla posted and already shared their Q3 delivery numbers, which was 139,300 vehicles. So in the Q3 of 2020, they delivered over 139,000 vehicles to consumers, which is actually higher than the average analyst estimate that was set around 136 to 137,000 vehicles. So they beat by around 2,300 cars for deliveries in the third quarter. And this beat on deliveries also helps the idea that they could also beat on both revenue and earnings over this past Q3 results that we're going to find out in about 2 days. So this is actually huge news because this record number of 139,000 deliveries was the highest ever for Tesla. This was a record high, and they actually beat their previous record for deliveries in a quarter, which was from Q4 2019, set at 112,000 vehicles. So they have destroyed that previous record. And within the same quarter of Q3, they actually produced 145,000 vehicles. So they produced more vehicles than they delivered, which is a good sign and shows that their operations are improving. So we've seen Tesla, we saw their estimates, we saw what analysts are expecting, and it's still massive growth year over year of around 62% in earnings for this quarterly report. We have some understanding why we think that's going to happen. We saw the huge increase in deliveries. We see a potential for the Chinese market to bolster up some profitability. And of course, we saw the increase in the production, which just shows they have the capability to sell more vehicles and deliver more vehicles than ever before. So with Tesla, they're always expected to perform very highly. Over the next year into 2021, these are some Zacks estimates. They show year-end 2021 year-over-year growth estimate in sales of 41%. They expect Tesla to grow their revenue and their sales 41% through 2021, and they expect Tesla's bottom line, their earnings, to grow at a rate of 70% next year. So Tesla has some massive growth expectations for the company, and these analysts, some of the best respected analysts from Zacks, see that Tesla is going to expect massive revenue and earnings growth. And that's not the only financial analyst group we're going to take a look at. From Simply Wall Street, they're forecasting around a 42.2% annual earnings growth for the company. So this is where we currently sit. Tesla has brought in over the past 12 months around $25 billion of total revenue and earnings at just over $376 million. And over the next 4 years, they're expecting total revenue to continue to grow at an exponential rate and earnings to become highly profitable over the next 3 to 4 years. And eventually, Tesla is going to be earning billions of dollars of net income. And of course, they actually expect Tesla to outpace the overall market by significant margins. They expect Tesla to grow, of course, earnings like we just saw at over 42%. And they expect annual revenue growth of over 28% over the next few years as well, outpacing the overall market, which is only expected to see 10% annual revenue growth. So Tesla has some massive growth estimates. These companies that do this financial research for a living, and that's how they generate revenue each and every day, are posting huge numbers for Tesla, and I believe this company can live up to the hype. Regarding this Q3 report, I have to mention before I give my prediction that of no way am I a financial analyst, in no way do I have any idea of what's really going to happen, and I do believe if we see a positive beat on either revenue or earnings or even both, I do believe shares are going to climb. I do also see the potential for Tesla to miss on one or both of these estimates, only because of the Q3 and the significant, of course, impact of the pandemic could have hurt their bottom line over the short term. We will have to see over the next few days. But my non-financial advisor opinion on the company is that I see them beating on earnings. I see them beating by that earnings per share number, not by a significant amount, but I do see them posting positive earnings per share, and I do see them beating that 0.60 earnings estimate. I'm not going to give a margin of how much I think they're going to beat, but I do think they're going to beat on earnings. They've done a strong history of beating what analysts are expecting, and I think Elon Musk is going to try to continue to impress, and I really do believe he could have bolstered up a nice, strong quarter with record deliveries, and that could help the bottom line of the company. So I think they're going to beat on earnings. With regard to revenue, that's a little bit of a different story. So we know how many vehicles they delivered within the quarter. Of course, it doesn't mean how many vehicles were actually sold within that quarter, because those are different metrics, because people could have ordered vehicles in previous quarters and those deliveries occurred in Q3. But that kind of delivery numbers and the production numbers help give an estimate on what revenue would be. So I think revenue will be close. Even if they do beat on revenue, I don't think they're going to beat by revenue by a significant amount. I don't see them posting anywhere near of like a $9.5 to $10 billion revenue number in the quarter, but I do think we can see either a slight miss or a slight increase between the $8 to $9 billion revenue mark from this latest report. So that was just my personal opinion on this earnings. In 2 days, once we get the latest news, I'm sure we'll make a video and discuss those massive headlines and discuss how the shares are performing post earnings. But as of right now, that was just kind of quick little analysis on the earnings report. A couple reasons why Tesla could beat what analysts are expecting and why shares might actually go up. This analyst report expects to see Tesla at around $500 by the next 12 months. There's other analysts that see a $500 share price within 2020. And I believe if the company can continue to improve, post some nice strong Q3 numbers, I don't think it's out of the picture. I don't think seeing Tesla at a record high of over $502 a share is really impossible right now. With how volatile the stock is, with all the ups and downs we're seeing in the share price, over the past 6 months, we've seen significant increases, followed by big declines, followed by more increases, declines. Like, it's a very volatile company in nature. So I don't want to take out the possibility of seeing a new record high if they can continue to impress. If we see strong beats on both revenue and earnings, I don't think we're going to see Tesla anywhere below 450 for the significant future. So thank you for tuning in, everyone. I'm the Gen Z Investor. That was just a quick, my little opinion on Tesla and Tesla stock. Thanks for watching, and I will see you in tomorrow's video.